Hello, I'm so very happy to have today's one-on-one with Phillipe Mareine, is the Chief Digital and Transformation Officer for Atos. He's also the head of CSR. Phillipe, uh, before this role, was the head of HR and also responsible for the Global Siemens Alliance. And we'll be speaking about both the topic of digital payments as well as the net zero initiative at Atos. So, Phillipe, my first question to you is: in 2020, everything went digital. Everything became very disruptive, but especially digital payments have brought in about a very silent movement for people who had not yet adopted them, have become very popular, especially here in the Indian context. It's suddenly become a huge booming opportunity for everybody. But since you're a global leader for Atos, it is important for us to know as to what is your perspective. How has digital payment changed things in the European countries, both on the urban large cities as well as the smaller ones? So over to you, sir.
So first of all, thank you very much for the opportunity, and hello everybody. So as you said, Nasir, indeed, we see, especially in the context of the Corona crisis, fantastic acceleration of digital transformation everywhere. So this is true, I mean, for the whole digital, I would say, world, but in particular for digital payments. We were still, before the crisis, even in Europe, using in majority cash to pay, and especially for small retail type of activities. And now, of course, we see this explosion, this acceleration of digital payments, driven, I think, by several factors. So number one, what I see is obviously that with the boom, the explosion of online shopping, especially in the context of the crisis, obviously this has conducted many people to experience a new way of paying, and therefore a new digital payment experience. I think the second accelerating factor is that digital payment, I mean, is more and more simple, easy to do, especially when it comes to payment without any contact. And we see a lot of that now in Europe, when you're only with your mobile, but it's also true in India, of course, and also in the US, but only with your mobile, you can directly, without any contact, pay your service or your product. And number three, we see also security in the digital payments, which has improved a lot, especially leveraging on artificial intelligence type of solution, what we call the fraud detection, and making now digital payment perhaps the most secure way of paying worldwide. And you know that we are very close to our partner Worldline, and Worldline is the European champion of digital payment and has invested a lot, of course, consolidating the market to make sure that digital payments are fully secured and easy to use by all citizens.
How are digital platforms and digital payment and some of this making it possible for achieving decarbonization and sustainability goals for companies in particular, but countries at large?
Yeah. No, absolutely right. I think obviously, perhaps just to give a few numbers, we see today digital activities. So not only digital payments, I would say, but the overall digital activities responsible for 4% basically of the global CO2 emissions in the planet. But also, we know that digital solutions can have also a huge impact to decrease these carbon emissions up to 15 or 20% according to the experts. So in other terms, digital is part of the problem, but a big part also of the solution to move to a carbon neutral world. And you know that especially in Europe, there have been very strong commitments towards carbon neutrality at the horizon of 2050 in the context of the Paris Agreement against climate change. And we see a lot of countries also mobilizing, continents mobilizing themselves towards decarbonization. And here again, my view is that obviously digital, and in particular digital platforms, have a key role to play. Because, of course, companies like Atos, and we see that also from our customers, will not achieve this alone. And decarbonization is a collective effort from all an ecosystem to drive new initiatives, new solutions, helping to better respect the environment. And in this respect, I think digital platforms where you can exchange data with the right trust and confidence. And in Europe, we are developing some standards to do that. And it's the same, of course, at international level, to exchange data with full trust and confidence, and therefore find new ways of engaging a full ecosystem to decarbonize. If I had to give an example, this is very true, for instance, for the waste industry. So how you can be extremely close in between the manufacturer and the retailer, for instance, to exchange data and to make sure that you can recycle your products. So we see a lot of that today in the market. We see also a lot of cooperation, for instance, to develop, thanks to new quantum computing solutions, ideas to develop, for instance, new materials to capture the CO2 in the atmosphere. So this is quite a fascinating also research based on digital platforms and engaging a full ecosystem of customers and partners.
I'm very happy to introduce you today to Ashok Vaswani. He's the CEO for the global consumer and payments for Barclays. Before this, Ashok has held several CEO portfolios in Barclays since 2010. I'm very happy to have you here, sir. So the first question to you is, I think we touched upon it some time ago. This is about the proliferation on the global digital payments space. I would like to invite your thoughts on the major challenges for new players, especially since they will be competing with global giants like Visa and MasterCard. So what are your thoughts around that?
So I think you've got to kind of segregate this market out, right? Visa and MasterCard are networks. They are, in a sense, the infrastructure that facilitates the payments, right? The fintech companies and the other new technology companies or new financial institutions, for example, can leverage Visa, MasterCard, or can leverage other such financial infrastructure. So, for example, in the UK, we have something called fast real-time payments, right? This fast real-time payments is now being exported to Singapore, to United States, and other markets, right? Those real-time payments are also digital payments. And then these kind of companies can leverage whatever infrastructure they find most suitable for their clients and customers.
So what are the impact on the newer players for this?
I think there's a lot of opportunity. This is a tremendous area of opportunity because payments is being rapidly transformed, rapidly innovated. And, as you've seen over the pandemic, the level of digitization of payments or the level of digital payments has just gone through the roof. So I think this is a tremendous opportunity for all, whether it's the financial institutions or the new companies who want to get into this space.
And I'm sure along with the opportunities, there are also threats. There is perhaps newer players may not have the kind of infrastructure that bigger players have. So what are your thoughts around both the opportunities for these new players, the way it is growing? So is it here to stay, one? And two, what are the kind of threats around frauds and scam and cybersecurity? So what are your thoughts on that?
Yeah, that's an excellent question, right? Look, to my mind, there is no question that digital payments is only going to increase, right? And I think we look back to history and say 2020 was an inflection year, right? As to what was happening at a secular rate of 3, 4, 5%, suddenly went to like a 15, 20% increase and continues to increase there. So in my mind, no question, digital payments only way up. However, digital payments, the implications of that are pretty significant. And I think we should look at the implications of this across 4 major stakeholders. The first is consumers and small businesses. Second is government and regulators. Third is banks and established financial institutions. And fourth is networks, right? So if you look at it from a consumer and a small business perspective, from a consumer perspective, clearly the level of convenience is much, much, much higher. You sit down at any point in time, you make a couple of taps on your phone, all your payments done, bills paid, and stuff like that. Consumer also loses control because it now feels like a game. Money comes in, money goes out. That physicality of cash is kind of gone, and control becomes an important thing. For small businesses, this is a way of getting money much, much, much faster. You know how big businesses and others take advantage of small businesses by extending levels of credit. This can speed up the velocity of cash in the system. When I was growing up, the good old adage that the check is in the mail is now dead. So that's an interesting thing. But, combined with this, for both consumers and small businesses, to your point, we have to really worry about things like fraud and scams. Fraud is when you're cheated. Scam is when you think you're doing the right thing and you land up doing something wrong yourself. And I think the regulators and the governments will have to kind of quickly move in to introduce some level of friction such that people are not frauded or scammed. So that is from the consumer and small business kind of perspective. From a government and regulator perspective, the good news is there's much more accountability of where the money flows. Therefore, things like tax, VAT, GST, all of that, is harder to evade. Anti-money laundering, KYC, all of these things become tighter and become better. But these governments and regulators will have to find ways to build out their own infrastructure, their own digital infrastructure to deal with this growth. Being totally dependent upon folks like Visa and MasterCard could potentially have issues, right? And therefore you see markets like Russia, India, Turkey, China, all developing their own infrastructures. Now, the own infrastructures are in one way reducing reliance on foreign infrastructure, but they have to learn how these infrastructures work. I mean, Visa, MasterCard have been doing it for the last 60 years. Chargebacks, rules, regulations, interoperability across the world. These are big, big, big issues that governments and regulators will have to kind of deal with. If you think of banks and established FIs, the whole business model for banking, this inertia, which really banks make a lot of money based on inertia, on money just lying around, whether it's in a current account, whether it's in a savings account, that inertia, or, people have to pay fees to move money around, or, a check means 2 or 3 day float, or a foreign check meant a 21-day float. That inertia from banking is going to disappear. So banking business models are going to come under tremendous amounts of pressure to find ways to replace these kind of revenues. But they're lower cost. Handling cash is a very, very expensive proposition. And therefore, reduction in cash, reduction in the need for branches obviously kind of helps. Banks will have to worry about resilience, because when you're talking about digital payments, you're telling the customer, I am there for you 24/7. Then you can't afford not to be there. And therefore, how to make sure that your systems are resilient and above all are prevented from things like cyber attacks, right? And therefore, investment in systems for resilience, cyber attack, very, very critical. Fintechs can take a lot of advantage of this situation, because fintechs can move money around quicker, can take data. For example, in the UK, they've launched something called open banking, which allows the customer to move data from any bank all into one place or to some other place. So I could be somebody who's just doing lending. Normally, a lender who doesn't have a current account is disadvantaged because they don't know the behavior of the customer. With open banking, they can get the customer data, right? And therefore, these kind of advances and innovation will help fintechs and big banks do a lot more. And in fact, this gives rise to new business models. At Barclays, for example, we've been pushing digital receipts, right? So when you do a transaction, you do it digitally. Why don't you get a receipt there and then? Now imagine you've done a transaction, you get a receipt there and then. Why can't you then do the whole return process based on that receipt, just using a QR code, right? That gives you what we call SKU level data, which is the individual items bought. Under a normal credit card or a debit card, you know you went to, what's the best supermarket in India now? Reliance. You know you went to Reliance Retail, right? But you don't know what I bought at Reliance Retail. With SKU level data, I know exactly what you bought. And therefore, those kind of business models using analytics, what is that kind of change? And the final element is networks. Networks have to make sure that they're trusted, that they're completely reliable, right? They have to keep sure that their rules and regulations keep pace, right? And have to worry about cross-border operability.
Thank you. Thank you very much.